Hey everybody, this is Boris Schlossberg from BKTraderFx, and this is our weekly commentary about the price action this week. And what an absolutely crazy week of trade this was, and very much supported our whole view that when you get lots of volatility, sometimes the best trade is no trade. Sometimes the most important thing is to simply wait and let prices take a directional cue. Nothing could have symbolized the kind of crazy seesaw, topsy-turvy market action than dollar Swiss this week. Look at what happened. First, we test the lows on Sunday night, then a massive reversal, 280 point up, which seemed to think that this was a perfect breakout candle. I mean, classic. We took out the top, we broke out the Bollinger Bands. Anybody who bought here got absolutely decimated. The rest of the week, complete turnaround to the downside. And that wasn't the only case. Here's another case of pound dollar. Huge downside move, only to be completely reversed to the upside move. When you get this kind of price action in the market, the single best thing to do is to simply wait, because what it shows you is tremendous amount of indecision. There is no control. There is no power to one side or the other side. And typically what you're going to get, what's going to happen to you is you're going to get taken out because you're going to join the wrong side at the wrong time. Jesse Livermore had one of the greatest sayings in the world. He said, our job as traders is not to join the bulls or the bears, or rather not to join the bull side or the bear side. Our job as traders is to join the winning side. Well, when it's very unclear who the winning side is, the best thing to do is to stand down and just watch the price action from the sidelines, which is exactly what we did for most of the week. We traded some very great short-term setups, made some terrific money on our overnight trades in the chat room, but basically stood back and tried to figure out where the direction was really going. And it clearly was a big tug of war between the carry traders and the risk liquidation movements. Let's take a look at what was happening on Thursday, because I want to show you how important it is to be flexible in your analysis as you try to set up these setups. I'm going to bring in the chart of yen, which is the quintessential carry trade chart. And let me just show you, surprisingly enough, what was going on in my mind. As trade was happening on Thursday, you see Euro-Yen was basically reaching this 164 resistance level. I was actually very bearish stocks and thought that there was going to be more carry trade liquidation. Around this point, around 10, 11 o'clock in the morning, I was thinking that we were probably going to go short Euro-Yen at the end of the day, because I expected fully this pattern to continue and stock prices to continue downward and create even more downside pressure and possibly pull the Euro-Yen all the way down to 161. So I was actually very bearish euros and looking to get short. However, you notice around 2 or 3 o'clock in the afternoon, we started to stabilize. And let me just bring in the chart of the stock market just to show you what was happening. This is Thursday. We made a major spike bottom, and the rest of the day we rallied all the way back up to practically even. Stocks were down substantially on the day and they came back up even. Well, you know, if you're looking on an absolute basis and you say, well, stocks ended up even, that doesn't mean anything. But if you're looking on a relative basis, that's a very, very bullish sign. We tested the bottom and then we came all the way back up. That tells you that probably it's the bulls that are winning the battle at this point, and you want to completely change your point of view and start looking at euro longs instead of euro shorts. Compounded after that, after the close of trade on Thursday night, we had very good, much better than expected earnings out of Microsoft. So at this point, I was thinking, wow, that means we're probably going to get good equity trade in Asia. That means we're going to get pretty decent support on the Euro-Yen. And that means it perhaps is time to start taking a look at the Euro. Because if you look at the Euro, let me just pull up the Euro chart here. Give me just 1 second as I chart. This is the pound chart. Let's take a look at the Euro chart. Because what was happening in the Euro that I really liked? The Euro basically made a small test at the bottom when there was a lot of liquidation, but really did not get sold off. And this is how it closed up. It closed up in the Bollinger Band in the upper zone very bullishly. Now, given the fact that I was positive stocks, that I thought carry trade was going to go our way, this is what we did. We went long at the close of trade on New York on Thursday at 43.20, and the trade basically took off right from the moment go. And let me just show you. Let's just take a look at the 10-minute charts here and show you how the trade went along. So this is we're going to go backwards a little bit on the trade. We joined the trade. This is a 10-minute chart, right around here. And for most of Asia, it sort of consolidated. Nikkei was up, which gave us confidence that the carry traders were going to come in. And sure enough, my thought was that at 42.30 we were very close to record highs. The other reason why I wanted to join the Euro trade was because typically when you get very close to record highs and you get positive momentum behind the currency, they're going to run the stops. And this is exactly what happened. Come London, we're basically waiting patiently. Boom, boom, boom. They run the stops, and we move all the way to 43.70. We trailed our stop right around here. We had a little bit of retrace, got taken out for about plus 30 in the trade, but it was one of the most easiest, savviest trades of the week. And it took 5 days to basically take a trade that made you money in 50 minutes. That's the key to success. Patience is a virtue, just like in life, same way in trading. I wish you best of luck. We'll talk to you next week.